Hi and welcome to the market alert for Friday, the 25th of September 2020. So, stocks pump and dump as stimulus hopes and the dollar slump. So it looks like Pelosi's not going to get away. And in other news related to this, stock rally reverses on report. There are no talks scheduled between Mnuchin and Pelosi. No talks scheduled at this time between Mnuchin and Pelosi on COVID relief. They already printed 6.2 trillion back in March, of which they didn't declare the 4 trillion, as can be seen by a video that I did on YouTube about this. So they just want to keep printing and printing and printing. S&P enters correction down 10% from the highs, goes red year to date. Time for a call. Well, they've been talking all week, so good luck with that one. They don't seem to want to answer the phone at the moment as far as the Fed is concerned. I'm sure Mnuchin would be quite happy. Yesterday, jobless figures again, 870,000 Americans filed for first-time unemployment benefits last week. And as it says here, last week's jobless claims are 4 times the pre-COVID lockdown average. You can see here that we've got a consistent pattern of 800,000 per week filing for first-time unemployment benefits in the US. And then on a lighter note and a bit of irony here, ECB, European Bank, pays 1% to give them 174 billion. So as it says here, in Europe's upside-down world, the ECB continues to charge banks that deposit cash while paying them to lend. Just let that sink in for a minute. So let's have a look at the market's reaction yesterday to the final meeting between Mnuchin and Powell, and how the market traded out yesterday morning beforehand. So you can see prices opening, trading up to the 200 MA, which is the black line. You've got the close and the previous day's low in the way. You can see there we had some resistance at this area with some selling. You see both of these here, and then the market moving lower before prices reverse and attempt to move to the upside, trading through the close, but then failing to hold for a moment. Now watch prices, they come back down towards the 200 MA. You'll see how they bounce off this area, having closed through it with some buying. So prices then spike to the upside through the BRN and then trade sideways, having a breather and closing back below the 5-bar moving average, back below the BRN, and then come back and have another look, but fail to move higher there initially, and eventually move to the BRN and then head towards the DP level. We've got a bit of potential weakness here, which you can see, but prices having a go at the DP level but fail to quite make it. That's as high as prices get, and then they start to drift down. We had a sell signal. Prices move lower, going through the scalp and move the stop to break even. You can see the green bar here. You can see the buying coming into the market, a clue that there is likely to be a change. So exit the trade as we get a second green bar there. And then prices reverse and move back to the upside. We had a buy signal here. Let me just wind this back for you, talk you through it. The market closing above the 20-bar moving average. The entry price just above the BRM, which is filled. But then prices fail to make any progress. And as they trade sideways, I'm not convinced the market's going to move higher. So I pulled the trade, which was the right thing to do, as prices then started to drift back down, that we see there, and then into the 10 o'clock cut-off period there. So let's move forward to the afternoon. Prices still struggling with the DP, which you can see here, and also the 200 MA is here. And prices move through this and then reverse. And what's interesting here is you've got a selling all the way through the DP, through all of the averages as well, and you've got the DP as resistance above, and then we've got some buying coming into the market there. Prices failing to close above the 5-bar moving average, and then trading down. And again, you can see them buying back at this BRN, and we've got the low and the close below here as support as well. Prices then reverse and move higher, straight back up to the DP level before we've got Powell and Mnuchin speaking. So again, you can see how prices were brought back up to the DP level here. So as they spoke, the market traded sideways back below the 200 MA there, drifted all the way down, which you can see there. And as we got to the 4 o'clock cutoff there was a signal, but Mnuchin and Powell were still speaking, spoke for over an hour yesterday afternoon. And you can see there that prices were just sideways. You can be sideways as the traders listen to Powell. Again, you've got to be aware of these things, and then prices moving to the downside. But then they get an announcement, and prices just move to the upside sharply, which we'll have a look at in the Dow. It's easier to see this. Let's just go back to yesterday afternoon, and there you go. You'll see prices. You can see where Powell and Mnuchin were speaking in the Dow. The Dow's reaction to them speaking, you can see they're sideways, and then the market takes off. They obviously said something that cheered the market up that they wanted to hear. Actually, just go back to this. And then, of course, as it said in the headline, that the stocks actually dumped after as well, because there's no deal with Pelosi with the COVID stimulus package version 2. So let's have a look at the DAX, and here you can see that prices are sideways. You can see some short covering and profit taking here during yesterday. The market currently trading above the 5-bar moving average, but how does this relate to the pivots and the DPs? Sorry, the BRNs and averages. So overnight prices have been sideways to higher. Where's the DP level? That's what we're interested in. We've got the DP here and the 200 MA there. So early on, prices were above both of these. Came back below the 200 bar moving average, and currently sitting on yesterday's close. They need to get back above the 200 MA if prices are to move higher. And we've got the high here. If prices are to move, they need to break through sharply to the upside. If not, we head down and have a look at the DP level, and way below this you will find the low, so a long way to yesterday's low, because if we go back to the daily chart, you will see the market's currently trading near the high, long way down to the low. Doesn't mean to say it won't get there, but at the moment there's more chance of it looking to break towards the upside to keep that momentum moving upwards there. And I think that's it. Let's just have a quick look at the news. Dollar down yesterday as well, which we saw, only down marginally. And news for today, medium impact news items for the UK and the US. We've got public sector net borrowing, core durable goods, and the durable goods orders for the US at 1:30. So nothing this afternoon to speak of. And either this morning, once we get the net borrowing out of the way for the UK as well, at 7 a.m. So the forecast is 40 billion borrowed, previous 25. Well, given what the Chancellor issued yesterday, the money printing goes on and on and on. Goodness knows where it's going to end, apart from spectacularly, I suspect. Okay, that will do for this one. As ever, thanks for watching. See you in the next.